Good afternoon. Welcome to Midcap Radar. I am Reema Tendulkar, and these are the top stories we'll be tracking at 1:30 p.m. on Midcap Radar. The Nifty and the Sensex edge lower amid a volatile session. Midcaps lag as liquidity tightening fears and geopolitical concerns weigh. Realty, auto, and metals lead the slide, while financials fare better. Automotive Axles gets a boost after Cummins' open offer to acquire 26% stake in axles and brakes maker. Vaccine supply orders worth nearly $130 million boost Panacea Biotech. The stock gains 18%. IRB Infra gains after a 36% year-on-year growth in toll collections in the month of September, even as the mop-up slips over the previous month. Midcap IT names like Sign, Birla Soft under pressure after profit booking. Well, for the markets as we speak, it's holding 17,100, but in the last 1 hour, we've seen the selling pressure accelerate. Right now, we're at the low point of the day for our markets. It's been a fairly choppy ride as well. So there have been multiple attempts where the markets tried to break out higher, claw back some of the losses, but that's failed. Currently down for the third or fourth day in a row. Last week's high was about 17,428 on the Nifty. So from that level, we've lost about 300 points. So it's a bit subdued for our markets today. The mid-caps are also struggling. The mid-cap index is down 1.1%. The advanced decline ratio in favor of the losing side. One stock in the green for currently two in the red. Realty is under pressure. The Nifty Realty Index bleeding 2.5%. Metal Index 2 losing ground with a cut of 1.5%. Let's welcome Shrikant Chauhan of Kotak Securities now for a tech check on the markets. Shrikant, afternoon. What have you made of the day so far? We're slowly grinding lower and lower.
Yeah. Good afternoon, Riva. I think, the markets are going to spend some more time within the range of 17,000 and maybe 17,400 on the higher side. And it is mainly because today it's a day of, it's a data heavy day because number of economy related data is going to come today. And tomorrow also we have to face inflation and IIP numbers for Indian markets. So I think because of that, the markets are going to spend some time within the range of 17,400 and 17,000. Yes, we may see the levels of 17,000, but till the markets are not breaking 17,000, I think we are going to see stock-specific activity in the market. And the strategy should be to look for adding some long position if there is any sell-off close to 17,000 levels, or if there is any pull back towards 17,300, then there we should look for exiting out of or taking some profit on long positions.
Okay, this the lower level of 17,000 is also where the 200-day moving average is placed, which is 16,985. So that perhaps is going to act as a support as well. So it's the range, and you've got to play the range. Shrikant, what about individual stocks? What's on your trading list?
I think the broad-based market is still really doing well, and number of stocks are crossing their previous highs, or few of them are into breakout mode. In that specifically, we like those stocks which are related to the festival season, like IRCTC, which is currently trading at 734, 740. The stock has spent a lot of time within the range of 750 and 700 on the downside, but eventually now it is crossing the ceiling pressure. So we are of the view that it is heading for the levels of at least 770, 780 in the near term. It's a buy at current level with a stop loss at 720 on the downside. And the other stock which we like is Trent. And here, if we see the chartical pattern of the stock, then it is forming symmetrical triangle after crossing the important level of 1370. So the next level to watch out for would be 1530, 1550. It's a decent upside from current levels. So Trent is also a buy at current levels with a stop loss around 1410.
Two buy calls, IRCTC and Trend. Thank you very much, Shrikant, for joining in. Let's now get to our mid-cap mover segment. Vivek joins in. As always, he's at the big wall, and he's going to be telling us about the mid-caps and small caps in action today.
Well, that's right. Good afternoon. When you're talking about the mid-caps today, mid-caps especially today are underperforming. But a couple of stocks on our radar that we are tracking, and stocks that are in fact even in this weak market, managing to hit 52-week high. When you're talking about Kalpataru Power, continues a stellar run, and this stock today is perched at a fresh 52-week high. Star Cement, on the back of significant M&A activity that we're seeing as far as mid-cap cement and small-cap cement names are concerned, again, this particular stock is gaining quite a bit of traction in the session. A couple of other stocks that we're looking at in the auto ancillary space. Omax Auto today on very strong volumes, up almost 13%. Everest Industries, now this particular stock continues a stellar run, up 25% for this particular month. We're also talking about Dreamforce. After the IPO, the stock actually saw quite a bit of a sell-off on the back of some renewed competition that the company may see. Today, made quite a bit of sharp bounce back. The other one that we're looking on is the chemical name. While Soda Ash has given much larger peers like Tata Chemical quite a bit of a fillip, DCW2 is gaining quite a bit of action. Poonawalla FinCorp, on the back of very strong business update that the company gave just a couple of weeks ago, stock continues its traction up quite significantly in the month. Now, on the other hand, today you're seeing some strong profit booking coming in, especially if you're talking about Mazagon Dock Shipyard as well as Garden Reach. Remember, both of these stocks are very sharp up moves or sharp run up. Today you're seeing a little bit of profit booking coming in. After the results of GM Breweries, in fact, if you're talking about GM Breweries, you're talking about United Breweries as well as United Spirits, all three of the stocks, in fact, are amongst the losers today. Also, Varun Beverages and Dr. Lal PathLabs, all three of these stocks too, in fact, are slipping in the session today.
Thank you very much, Vivek, for that. Get into a short break. When we return, we'll put the spotlight on real estate developer Shobha and get you all the details about the company's Q2 update. Stay tuned. This is our favorite mid-cap spotlight segment. We're going to be talking about Shobha Developers. Vahishta joins in to tell us what the company had to say in its latest business update. The stock, however, is down about 2%. Vahishta.
Hi, Rima. Thanks for that. Well, Sobha Limited has released its real estate operational update for Q2 of FY23, wherein the total sales value was up 13% year-on-year, and the average price realization was up 14% year-on-year to approximately 8,700 rupees per square foot. However, on a quarter-on-quarter basis, that is sequential basis, there is not much growth, with total sales value which was marginally up 2%, and the average price realization was up just about 3%. Now, on a half-yearly basis, though, the numbers look good, with the total sales value up 35% year-on-year, while the average price realization was up 12% year-on-year. Now, the new sales in terms of square foot was higher in cities like Bangalore and Coimbatore in Q2 of FY23, but was lower in Kerala, in Gurugram, in the GIFT City, Chennai, and in Pune. There was also 3 new residential projects which were launched in Q2 of FY23, 2 of which were in Bangalore and 1 was in Trivandrum. And this refers to a total saleable area of 8.8 lakh square feet. Back to you.
Okay, that's the update from the Bangalore real estate player. But in moments from now, in about 5 minutes, we'll also tell you what DLF had to say and how business is shaping up both on the residential and commercial side. Timsy will be joining in for that. But Vahishta, since we have you with us, tell us about Panacea Biotech. It's a big order win, and that's got the stock all fired up.
That's right, Rima. Well, the company has received a long-term supply awards, which is worth approximately $127 million, which is nearly 1,000 crore rupees. This is a contract from UNICEF and Pan American Health Organization for the supply of its WHO pre-qualified fully liquid pentavalent vaccine. And the UNICEF award is worth approximately $100 million US dollars. This is for the supply of approximately 100 million doses during the calendar year 2023 all the way up to 2027. And Pan American Health Organization award is approximately 30 million US dollars for the supply of 25 million doses from 2023 to 2025.
Thank you very much for that. Now 19% higher on Panacea Biotech. But as promised, let's talk about DLF. The company is witnessing a strong pickup in sales and leasing of properties across cities. Timsy joins us for more details and from what she's picked up from her sources. Timsy.
Well, company sources are telling CNBC-TV18 that some positive trends are being witnessed when it comes to all the 3 verticals in which DLF is present. Starting with office spaces, the company is seeing a rise in work from office trends, more inquiries and faster leasing exercise. Almost 85 to 95% attendance at office is being seen in Cyber City, Chennai and Gurgaon. And similar trends are being witnessed at Hyderabad and Kolkata office spaces. Not just this, the recent leasing trends show that the company has leased including 1 lakh square feet to an athleisure brand in Gurgaon, that is at downtown Gurgaon. And also DLF plans to re-enter Noida market after a decade with an IT park and a data center. Sources say that IT park is already pre-leased at 75% and soon the remaining will be leased too. When it comes to retail, as DLF has good presence in malls, festive season has got cheer back to the malls in terms of footfalls. In terms of expansion, the company aims to add 2 malls, one in NCR and one in Goa, where the NCR mall is planned in Gurgaon with about a 3 million square feet of size, claimed to be the largest mall in the country. The company in future looks to double its retail portfolio by adding 4 million square feet of retail space. The third segment, that is the residential homes, that is also showing good trends. The company is seeing strong sales numbers despite hikes in home loan rates. The project DLF5 Groove has clocked 1,800 crores of sales. The other project in Sector 93 in Gurgaon too has got the company about 600 crores of sale. The new launch of residential project at Panchkula too has got 600 crores of sales. Let's see how positive in future the stock looks. Back to you.
Thank you very much, Tim C, for that. We'll also get you some important corporate commentary. Earlier in the day, we had a chat with Vikas Gupta, Executive Director at PG Electroplast. Listen in to what he had to say.
Are targeting definitely we aspire to have a double-digit EBITDA margin. But please understand the market conditions are really dynamic and competitive. So we keep on evaluating. And the client acquisition is also one thing that we have to keep working on that. So that is something, a dynamic thing. So as of now, we are maintaining a guidance of around 7% of EBITDA margin. We are targeting, as I told you, in the current FY23, we are targeting a product, the revenue of around 11 crores coming from product business. And going forward, the product business will grow at a CAGR of around 35-40%. So increasingly, the share of product business will be increasing in our overall revenue. And I think it should reach a level around 75 to 80% in next 2 years.
Okay, this is a company which manufactures plastic body for a lot of consumer appliances like washing machine, room air conditioners, refrigerators. So that this business of manufacturing the plastic body contributes about 60% to its overall revenues. They also have an electronic manufacturing service, EMS. They're EMS providers also for washing machines, refrigerators. So basically in the consumer and consumer electronics space. So when that business does well, I guess demand for PG Electroplast is also looking up. As we get into a break, here is something great for all our investors. You can now track the US market action real time on Money Control. So log on to the Money Control website or app and stay informed about all that matters in the global markets. Welcome back to Midcap Radar. Let's get to another big story, another big stock that we're tracking. Automotive Axles is surging after Cummins Inc. has made an open offer to acquire 26% stake in the company. Sonia is here to tell us more. Sonia?
Thanks a lot for that. So this is an interesting one. Cummins, in any case, had to make a mandatory open offer for Automotive Axles because they hold about 35.5% stake. But Automotive Axles is now up almost about 4% odd. The open offer by Cummins is for the acquisition of around 40 lakh shares of Automotive Axles, representing 26% of the share capital. Now, BF Investments is the other promoter in the company. So Automotive Axles is currently co-promoted by the Kalyani Group's BF Investments as well as Meritor Inc. Now, once Cummins open offer goes through, it will be co-promoted or co-owned by BF Investments as well as the Cummins Group. Now, the stake that BF Investments holds is 35.5%, which means it's worth 1,137 crores at the current market price. The big question is, will the Kalyani Group tender into the open offer? They may not, because the open offer price at 1,500 is much lower than the current market price for Automotive Axles. But the company has done very well in the recent past. If you pull up the chart of Automotive Axles, it's more than doubled since Jan of 2021. It is a 41-year-old company. It manufactures axles, brakes, suspension systems for the trucks and buses segment in the commercial vehicle industry. And if you look at the past performance, the numbers have looked pretty good. So, in Q1, the revenues, for example, went up 96% year-on-year at 500 crores. The profits also went up quite a bit. Of course, the base was low. But if you map the last 6 quarters of Automotive Axles, it had 3 really subdued quarters. the revenues, the average revenues have gone up in the last 2 quarters. So business is definitely picking up. Hence, an interesting move over there.
Sonia, thank you very much for that. But don't go just yet, because you're also tracking the kind of demand Tiago electric vehicle that's from the Tata Motors stable. And it's just been launched, right? What's been the response?
So as we know that Nexon is the fastest running, electric vehicle on the roads, right? And now the Tata Motors group has come out with the Tiago, which is the first EV hatchback in that segment. And it's done very well. It's seen 10,000 bookings just on day one. Now the electric vehicle space currently forms just 8% of Tata Motors passenger vehicle portfolio, and it's expected to grow to about 30-odd%. The volumes for Tata Motors have been very strong. So in September, for example, Tata Motors sold 217% higher than last year. So they sold 2,800 units in the month of September. Now the monthly run rate is 2,800 and the bookings for the EV is at 10,000. So you would expect that perhaps this would come through in revenues. It may not, because some people book and then they don't eventually order the car. Jefferies has a buy with a target price of 540. Nomura has a buy with a target price of 520. Nomura, in fact, believes that Tiago has the potential to become the best-selling electric vehicle in India. However, the Tata Motors stock is not reacting much because the JLR business, which is over 80% of its operational performance, has been under a bit of pressure on account of sales weakening in pockets like China. So that is the, the overarching sort of pressure on the stock. But otherwise, in the domestic business, things are looking very good, especially on the passenger vehicle side. Back to you.
Okay, Sonia, thank you very much for that. Yesterday, Tata Motors was under pressure, but today there is that bit of a rebound. But broadly today, IT is under pressure, so TCS is sulking. The stock has recovered from the day's low, but it's still down close to about 0.5%. Perhaps it's just profit booking because the stock had seen a pretty good run up in the last 1 week or so. If you pull up the chart, in the month of October itself, the stock had seen some gains. Purely in terms of Q2 numbers, they were ahead of street expectations on the revenues, on the margins, as well as on the profitability as well. The deal wins were fairly steady. The management said that they're on track to achieve their Q4 margin guidance of 25%. They also said that attrition has peaked out. But I think the worry in the market still is that these numbers are backdated. The future is still unclear, especially when it comes to FY24 outlook on revenues and margins, because tech budgets only get set in around January. So, and the management right now at least does not have any visibility on what the tech budgets are going to look like. But listen in to what the management had to tell us about its client base, the deal wins, the demand outlook.
Most organizations that we work with, especially the large ones, they have a very rigorous process of planning for the future. Within that, with so much of uncertainties, at best, their planning horizon can get shortened to, let's say, every quarter and adjusted on a rolling basis for the subsequent quarters. When we ask them, are you going to cancel any of these programs, right? Resounding answer we got from our clients is a no, right? So which is giving us some comfort in terms of at least, the next 2 quarters, I don't see any big issues.
This time around, if the weakness starts, it's likely to come in from the manufacturing side. As energy, supply chain disruptions start, so we need to be wary of that. Within that spectrum, we see US manufacturing doing very well. We see some amount of caution on the European manufacturing side, and that bears watching as to how that plays out, and we need to be careful about how we are positioning on that. Both it is sustainable and we should be targeting that to maintain some momentum, but at 7 to 9 is a comfortable band for us.
Well, that's all the time we have for you in Midcap Radar Mutual Fund Corner when we return. Thank you for watching.